With Aero India 2023, the Indian defense sector has managed to highlight India's Atmanirbharta or self-reliance in building military equipment. In the India Pavilion, dedicated to success stories in indigenization, the Tejas Mark I fighter is lionized as a key stepping stone to the development of a range of fighters. Tejas Mark II, the fifth generation fighter eponymously called the Advanced Medium Combat Aircraft and the twin engine deck based fighter, is intended to fly missions from the Indian Navy aircraft carriers. In addition, the LCA Navy is eulogized as an important platform for technology development that will power naval aircraft such as the TEDBF. The central government expects more than 200 agreements to be signed at the 5-day event for investments worth 75,000 crore rupees. Analysts believe this would improve the revenue visibility of listed defense companies in the long term.
The exhibition will witness participation of 98 countries and many domestic companies like Bharat Forge, Hindustan Aeronautics, Bharat Electronics and BEML would be displaying their technological and product strength. Therefore, it could bring some good news to the sector in terms of MOUs and new orders.
However, a modest growth in the defense budget for financial year 2023-24 coupled with premium valuations of related stocks could weigh on the sector's performance in the near term.
The long-term prospects for the defense sector has improved significantly over the years as the new defense acquisition policy is expected to accelerate the indigenous manufacturing, which is through active participation of public and private sector. Also, there is a focus to cut the imports and reduce the dependency. Further, the government has put an import embargo for a large number of items where for those products where we have enough technological capabilities. Given this scenario, we strongly believe that domestic manufacturers are going to benefit from these steps. If you see the last 3 years, average revenue for the sector grew by somewhere around 10% and profitability has grown by around 15 to 18%, 15 to 20%. However, due to premium valuation and modest growth in the budget allocation for FY 22-24, we have a neutral rating on the sector.
The budget 2023 has allocated 5.94 trillion rupees for defense and related services for FY24, up 13% from the budgeted estimate of 5.25 trillion rupees in FY23. The total capital outlay, meanwhile, is 1.62 trillion rupees, an increase of 16% over the previous fiscal year's budgeted allocation. In comparison, investors were expecting up to 6.6 trillion rupees in allocation. Notably, shares of BEML, Bharat Dynamics, HL and Paras Defense have tumbled up to 14.6% since February 1. However, the Nifty 50 has gained 1.5% so far this month, while the Nifty 500 is up 0.22%. Analysts suggest investors with a short to medium term view reduce their exposure towards the sector, while long-term investors may enter related stocks on corrections.
The government, however, is focused on improving indigenization and achieve export target of $25 billion by FY25. Therefore, this shall lead to stronger order inflows for the domestic defense companies. However, the stocks in the sector could remain range-bound until big order announcements kick in, as most of the positives like high order book and margin expansion seem to be priced in. For long-term investors, we advise that they can accumulate defense stocks on every dip, as the long-term defense story remains intact, and we believe India has only scratched the surface as far as indigenization and building of defense capabilities is concerned.
Mantri of Sher Khan prefers Hindustan Aeronautics and Bharat Electronics Limited. Clearly, analysts are upbeat on the sector given India's growing manufacturing prowess. Yet, the sector remains prime for long-term market participants as most positives are factored in. Further, 30% premium over historical valuations leave little room for immediate upside. Meanwhile, in today's trading session, investors will track announcements from Aero India Show. Besides, weekly F&O expiry, bond yield movement and other global cues will guide the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.